Hoş geldiniz değerli konuklar. Herzlich willkommen, liebe Gäste, and a very warm welcome to all our guests, Austrian companies in Turkey, friends of Austria, and a special warm welcome also to all the participants and members of the Ankara Business Lunch, 3C Business Lunch Group, which we have the honor to have among us today. There will not be a lunch, unfortunately, for those who are used to it in Ankara, but I think a lot of very interesting information. So our special guests and supporters today are Denizbank Turkey and Denizbank Austria. And I would like to welcome Mr. Semih Özcan, Director of Wholesale Banking in Austria for Denizbank, and of course, Mr. Hayri Cansefer, Executive Vice President of Denizbank Turkey. I can really wave to him across the room, across the street where Denizbank is at home here. And of course, our keynote speaker, Mr. Serhan Salman, Chief Economist from Denizbank. Warm welcome. I think everybody is very much looking forward to hearing from you what's going on in Turkey and what have we all to expect in this interesting year 22. Just two remarks before we continue. We have a record number of participants today. As I said, I think this is what moves all of us, what's going on here in Turkey. And this is why, as an introduction, I would like to present to you a survey which we did among the Austrian representatives in Turkey of Austrian companies. So these are the companies in Turkey whom we asked about the economy. And this was done in October. And normally this is not a long time ago, I would say, but for Turkish economic perspectives, of course, it sounds like ages. Lots of things have changed still since October, but it will show us a little bit what the sentiment, what the feeling of these companies here is and was. Now, before I start with this presentation, I would just like to ask all the participants to switch off their videos and mute their microphones for the moment. We will register this event, but not the Q&A part. So in the Q&A part, you can ask freely all your questions, but this part, the first part, we will register. And of course, you will receive a link for the webinar afterwards and the presentations so that you can go through them. Feel free to put your questions even immediately in the chat. And with this, I would like to start with this survey which we did as the first part. A big thank you to 107 representatives of Austrian companies here who have responded to this survey, which we've been doing for 5 years now, and which gives us a good picture of what's happening here. As I mentioned, it was online in October. I have no idea who responded. It was completely anonymous, but I know it's a lot of work. And normally I also click away surveys, but thank you. It's a good response rate of 25%, which we received. So we are very happy. And as I mentioned, you will receive it afterwards. It's also in Turkish, and I will just present it in English, so it's easier for all of us. So I start with this number 7, which was the 7th question, because just to show you who participated. What was the main activity of the mother company? And this is, as you see, 50% of them of the companies here, they are representatives of the Austrian company, and about 28% have services which they offer in Turkey, and 22% are production companies. So that gives a picture of what the Austrian companies are doing in Turkey. And if we ask what is the Turkish company doing, it's how much do they export. You see that quite a few are also exporting. More than 80% of exports is 20% of the companies, the red part, and even 60 to 80% of the companies, or 42% of the companies are exporting quite a lot. And I think that's important to know, because that also gives answer why some of the companies are quite optimistic also, which we can see. The next question was, approximately how much is your turnover in Turkey? And here again, you can see it's big and small companies, and about 20% were bigger than 20 million euros, but also very small companies are in this survey. It's a very nice survey about all sizes of companies active here. Okay, so now come the questions. which we asked, as I said, 5 years already in a row. And how would you assess the general economic situation in Turkey from a business perspective in the last 12 months, which was asked in October? And you see 34% said it became better in the last 12 months, and 46% said it got worse. And when we asked them in October what they think about this year, then again, 34%, interestingly, the same number, said it will get better, and 34% it will get worse. Now this, I must say, I just listened to a presentation about which we did in all countries among the Austrian subsidiaries, and it's a low rate. In most of the countries, the Austrian subsidiaries were more optimistic about 2022. So we can already see in October the feeling was not that optimistic. Having said that, again, we have 65% approximately who say it will be the same or better. And you can also say that's not too bad. The next question is, again, how did it look more in detail in the last 12 months? Outlook on key business figures. So what was the turnover, your complete turnover in the last 12 months? And here, interestingly, this is not percentage, but number of respondents. But if we have 107 respondents, it's approximately percentage. 57 of those answers said it was better. It was a higher turnover. So that's very interesting. And even 29% said the same. So only 21% said it became less. I think that shows it was not that bad. The same when you ask them about the order level. Again, the red column is quite high. So even the last 12 months in 2021, it was quite good. The same with capacity utilization, number of employees. That's the only thing where they said they stayed the same, not many more coming, and the same with the capital expenditure. But it's interesting that it didn't look that bad for the companies in 2021. So we also asked them, what about 22? And in 22, you can see again, it's quite optimistic. They expect higher turnover, 66 of 107, or the same with 30. They also see a higher order level. They see a higher capacity utilization. And the only thing is when they say the investment will stay the same and the people employed will stay the same approximately. But still, I feel it's not too bad. And it shows that the companies are not doing that bad here in Turkey, the Austrian companies. So the next question is, now this we also asked for many years, which 3 key areas in public administration in the company have the most urgent need for reform? I think the answers are not very surprising. It's the same what you can hear from TUSIAD and other organizations. It's a predictable economic policy. And this is what many say. It's not the exchange rate, it's the predictability of the exchange rate. And the same with the public administration. If it's predictability, the economic policy, it's fine. This is a high level, has been the same for quite a few years. The second thing is here, the political stability, of course, is always important. And on the third issue is the legal certainty. These have not really changed over the last few years. It's always the same answers we get. What has changed a little bit is the tax and customs regime, which has been more important for Austrian companies last year, and which was not that important a few years ago. And the other issues you can see here, they're not that important for the companies doing business here. Again, this is a subjective point of view of the managers of Austrian companies in Turkey, and that's not more and not less. So the next question was, which market-related issues have the most urgent need for reform also? And here we can see it's been one of the main points has always been payment practices. And here we see it's quality standards, which is very important. Of course, Austrian products are not the cheapest, so you need buyers who really want quality. So quality standards is the main point they mentioned. And what is interesting also, of course, the highly trained workforce. This has become more important, not only in Turkey, by the way, but this has become more important. It was not as important in the last few years for the companies. And the third thing is very new. It's the cost of raw materials. Also not very astonishing. It's the same in the world, but this was not an issue until last year. And this year it's come on number 3. And then, of course, the payment practices. These were more in the foreground a few years ago. So this seems to be not as bad as it was, which is a good sign also, I could say. And then, of course, the purchasing power. This is always important for products. This is approximately the same level as it has always been. So this is what the companies say that are the most urgent needs for reform, or which things would be important for them to do better business. One question I hope we will not have to ask again is how was your company affected by the corona crisis? And here, if we look at it, the first view, it's not as bad as you would have thought it would be. So the real red part of the graph is not that big, but 24% said the supply issues. And again, this is not very surprising. It's what we see in the whole world. And it's a theme which is very important for Turkey, actually, for European companies. But here we see that also European companies in Turkey had this issue a little bit. If you add, otherwise, the other issues were not in the red, but if you take red and gray together, apart from the supply issues, of course, we had some issues with the customers, which had some extra wishes, if I understand that correctly, question. And the customer payment problems also there with gray and red. What has not been an issue for Austrian companies, interesting, was with personnel, with the people. They say that was not an issue at all. And it was not a big issue that the turnover and the sales dipped. So you see a very interesting picture here, and you get the presentation. You can have a look at it in detail afterwards. This is what the Austrian companies were thinking. This question we've asked before, and I think it's not very astonishing. It's in German we say non-net question. It's a question where you obviously know what the people will answer, but it's amazing. 90% of the companies say yes, we would like to have a deepened customs union between Turkey and EU. I think this is really a political issue which has to be pushed forward. It's very important to do more business. So, and another thing was out of interest, we said, you see, the whole world of work world is changing. So we asked, will you have more home office and online meetings after the pandemic? And again, there seems to be a change because 50% said yes. I think 3 years ago we didn't ask the question, but they wouldn't have said that. So this has changed in attitudes, and it's only about 30% who say no, we won't. So let's see what will really happen after the pandemic. Yeah. We also asked, what do you expect from us, Advantage Austria? And this has been the same over the years. It's help us in networking, get us in touch with other Austrian companies here, which we are trying to do, like today, unfortunately not physical at the moment, and so on. This is what our service is to you. And of course, if you have any questions and problems with the bureaucracy, with ministries, please contact us. That's what we're here for. This is what I wanted to present to you in short. If you have any questions, please put them in the chat. But with this, I would like to hand over to Heidi Bey from Denizbank to take over and to tell us about the bank and to introduce our keynote speaker. Thank you, Heidi Bey.
Thank you. Thank you. Warm welcome to all attendees. Actually, we are together with my colleagues, as Mr. Karabaczek introduced. Semih Bey is our wholesale banking director residing in Vienna at Denizbank AG. And Saruhan, he's our chief economist. And we have also Bilge with us. He is senior vice president residing in Istanbul. And Chris Mücerretoğlu, he is the corporate and commercial banking group head at Denizbank AG. So happy to see you all. A brief intro about Deniz Group. Actually, we have started banking. Actually, the bank has been founded by Zorlu Group back in 1997. Comparatively, we are a young bank. but a rapid bank, I may say. We have started the ranking as 81st back in 1997 and climbed the stairs carefully and reached the 5th place among the private banks, having 300 billion of an asset size and having a market share from each bucket, let's say 6 to 6.5%. Full-fledged banking, we are doing, we have different business lines, say it retail banking and wholesale banking. In wholesale banking, we do corporate and commercial banking, project finance, leasing, factoring, and foreign subsidiaries. There, Denizbank's international network coverage, a couple of words on that. Denizbank AG having 26 branches throughout Germany and Austria, predominantly 17 of it in Austria for the time being, an asset size of 7 billion. The largest subsidiary of a Turkish bank residing in Europe, having more than 200,000 clients and working with European, mostly Austrian and German blue chips and corporate customers. Denizbank Moscow is our Russian subsidiary, who is doing only the corporate banking with our Turkish clients residing in Russia. And we have Deniz Bahrain branch and also our Eurodeniz branch in Cyprus. Deniz Financial Services Group is actually is having 14,000 FTEs with 16 subsidiaries, full-fledged Intertech technology company, leader in its sphere, leasing, factoring, investment group, real estate investment trust, and with all portfolio management, we are serving to our clients. So in a nutshell, Deniz Financial Services Group is having 720 branches and 12 regions. Our regional heads are the CEOs of their regions, and they have approximately 50 to 55 branches to govern. We are active in 81 cities throughout the Turkey. Saruhan, maybe next slide. Couple of words on Deniz AG. Actually, numbers: 7 billion of asset size, 3.5 billion of loans, and deposits 5 billion. 4 billion is coming from Austria and Germany, from Austrians and Germans. These clients are very valuable for us. They are approximately 185,000. In Denizbank AG, we can serve to corporate clients as well as to retail clients. We have our headquarters in Vienna, and we are trying to create also synergies with ENBD Group, which is our ultimate shareholder, starting from 2019. A couple of words maybe on ENBD. Emirates Bank, Emirates National Bank of Dubai. Next slide, Saruhan. There we have the headlines. It is owned by government of Dubai. It is an A-rated bank, having a market share of market cap of $23 billion. Active in 13 countries, predominantly in Gulf countries. Actually, the last 5 years, having an international expansion plan, and a big part of it was Turkey. And they have also branches in Egypt, kingdoms of Saudi Arabia, India, Singapore, and of course Turkey and UK. What we are trying to do within the group is trying to complete the triangle between Europe, Turkey, and GCC. And what we are witnessing with our colleagues in Deniz AG, there are a lot of Austrian companies and European companies active, of course, in Turkey, first of all, and then in Gulf countries. Actually, we are trying to introduce our clients to the relevant colleagues at ENBD. it is very straight through process because say, I mean, an Austrian company approached us and they were seeking a banking partner in Saudi Arabia or in United Arab Emirates. There we are arranging the necessary contacts, introducing them each other, and then following up our to-dos with our clients. The coverage is pretty much strong in UAE because they have a market share of nearly 20%, 22% in Dubai in terms of assets, and they are very dominant bank in Gulf country. So maybe the main message here, we are at your service in our coverage with ENBD Group, with Denizbank Financial Services Group. In case need be, of course, we will be sharing our contacts with you, and we will be pleased to help you, to walk you through these investments and walk you through the opportunities in these regions. We should also not forget our Russian coverage. We do only do their corporate banking, and we are also at your service in Russia as well. So thank you for the opportunity, Mr. Karabaczek. I'm leaving the floor to our Chief Economist. Saruhan, go ahead, please.
Thank you, Hayru Bey. So I go ahead and put the presentation back on once again. Hello for everyone. So what we are going to talk is the Turkish economy, as you all know. The thing is how the flow is going to be. First, I'll try to give a brief information about the world global outlook. Then we will talk about what Turkey had been doing up to now, how the investment evolved, and what kind of an economic environment we were dealing with, and of course the current economic environment on the last part of the presentation. So I give a quick start with the flow. So you see, this is the world currently, and it is expected that the world is supposedly grow to up to 6% for this year, and that's a recovery from the COVID sessions, let's say, once the economic activity is back, to our lives. But how the world evolved up to this, the United States and the emerging markets have been the main drivers. Of course, I mean, some parts also related with the China. When you look at the coverages for 2021, you will see that United States managed to recover most of its losses and even, add to that. And also the emerging markets has been placed on the same level. But when we don't see euro area is, putting that much, they couldn't, cover more what has been lost, but they will continue to grow on the 2022, and hopefully the European area is back to their income levels during 2022. So the problem is that for 2022, actually the expectation for the growth was even higher, but the thing is all these supply disruptions and higher inflation and the debt burdens all over the world, putting pressure on the growth side of the world. So what happened during the pandemic? The thing is, people, I mean, to elevate all these economic problems, all the governments, the policymakers announced a lot of supports to their economy. So these were like basically on the budgetary measures, also off-budget measures. You will see Turkey is right in the middle right here, like around 13%, support to the COVID affected economy, let's say, and most of it was the off budget. What we mean is the actually the loan side of the Turkey. So we throughout 2020s, what we did, we basically increased the volume of the loans, both basically on the Turkish lira side to cover the losses, and some part on the budget side. This is important that Turkey lose less budget during the COVID side, because we right now using that buffer with the current, political environment and the policy implementations of Turkey. You may see that, like in advanced economies, it's half by half, like the fiscal policies and monetary policies has been used, like similar percentages. But when you look at the, US and UK and the Germany, these countries basically had a lot of, social transfers. So 15-19% for them is like huge amounts if we compare with their, budgets. So also they had to use other measures on the budget side. But what is the outcome of it? So this is an expansionary policies, and you had been hearing a lot that, on the US side or on the European side or wherever you look at it on the big central banks, you said that, monetary expansion. You see on the left side of this presentation, the Fed, ECB, and they all gone up to like 8 trillion, 9 trillion amounts of their budget. So that they increase the monetary expansion. They put a lot of money into the market. And on the other side, as we talk about the public debt, what happened on the advanced economies, the 20% increase on their public debt, which was also, to deal with the COVID perspective. Also emerging markets, even though they have less amount to, spare, they increase like 10% of their, budgetary spendings to deal with the COVID environment, to cope with the thing. So all these monetary expansions, this had to have some consequences, that's for sure. And this is what have been we all going through. So you see that on the left side, all the commodity prices increased, and also inflationary expectations. On the right side, the inflation has been increasing all over the world, and this has not been witnessed for the, let's say, for the close history of the world. So what is going to happen? All this probably 2022, these supply disruptions will be there, and we may not see that much of a, commodity price decreases. So the inflationary environment will here to stay for a while, and we will see that on the big central bank point of view, they will go ahead and do more tightening on the monetary side, and we will see that interest rates is going higher in order to deal with the inflationary environment. And that means that is going to put pressure on the economies, on the, production side, also on the demand side. So we do not expect that much of a, proper, let's say, increase on the GDP side. There will be recoveries, of course, there will be increase on the GDPs, but the pace will be slower, as we see, since this government's new policies will deal with on the policy side, on the tightening side. You see on the left side, the food, energy, base metals, all commodities before the COVID era. Let's say this 100 was the, we indexed this figure for you, and it was 100. Let's say that it was at the start, not currently 30%, 60%, like increases in all of the prices on the FX terms on the global environment. And we don't know where the, the stresses will come from right now. The Russia and the Ukraine thing will probably, it's going to put additional burden on the energy side. And so some, there was recovery started to happen on the energy side, but right now it is not, going anywhere. And the problem is, what we can say, I mean, the world on the logistics side, it was more efficient. It looks like that, and the merchant ships and the ports and everywhere was like working so efficiently that pricing was so low in terms of logistics. But currently, as you know, all the supply disruptions, probably due to the lockdowns period, of course, and also still with the Omicron, it is less severe, but still it causes like less mobility restrictions and some labor shortages in terms. So but we see that this needs time to be resolved. I mean, 2022 will be a recovery time, but I mean, the recoveries will be, put additional prices. These are also important for Turkey because we will discuss a little bit later on the budget side, on the, export side, what Turkey has been achieved and what Turkey will do. All this world situation also has some effects, of course, on Turkey. So if we look at the vaccination thing, because what we right now have the Omicron around, but still the vaccination is put, has been the real effectiveness on the normalization of economic activity. Turkey is one of the countries could reach to the vaccination and vaccinated almost 67% of its whole population. And this is even close to the advanced economies. And this is important for us because we are expecting a lot of income on the tourism revenues, and we need our economy to stay where it is. We want economic activity to roll on. So Turkey managed to, it is a good thing that Turkey managed to, receive all these vaccines and, distribute it among its people. And it is, what Turkey has been accomplished is more than the, world averages, as you see on the right side. So what Turkey is probably one of the, biggest economies in terms of GDP and the population, if you compare with the rest of the world currently, with the current all this volatility and FX depreciation, this and that. Currently, Turkey placed as 21 in accordance with the IMF measures, but still it is one of the biggest economies around the world. When you look at the population, 85 million people, it is a good place in terms of domestic demand. Well, I will talk a little bit later. So you see average real GDP growth on Turkey for the last 20 years is the average is like 5.4, which is, we believe, is a good number, since if you compare with the emerging Europe or the counterparts like South Africa and Brazil, Turkey managed to grow further than it is compared countries. By doing so, Turkey tripled its GDP per capita, and that is also helping our economic growth, since people have more money to spend, and Turkey is a country where domestic consumption is also very important in terms of growth perspective. So when you look at it, how Turkey achieved these kinds of growth, you see that 30% of the GDP has been put into investment on the left side, and this has been the case for the last year on Turkish environment. And on the right side, you see the population in Turkey and how we diversify it. You see that the median age is like 33 years old, which means that the population is young and they will continue to produce and consume for the coming years. And this is very interesting if we see that a lot of entrepreneurial skills and a lot of investment on the private side. People have this, investment appetite on one side, and on the other side, there are some people to spend what they earn. So this is a good perspective. And with all this, what happened was Turkey put a lot of emphasis on the infrastructure side, and they had built highways, and they had increased the capacity on energy side, put airports, aircrafts, or wherever you look at it, Turkey put a lot of infrastructure on the ground, and in return, Turkey managed to be one of the expert leader and being a leader on numerous sectors. And as you see on the left side, if we compare with Europe, agriculture, white goods, iron, steel, motor vehicles, Turkey has been on the highest places, we could say. So what we understand from here, this is a country, there is an domestic demand, there is an investment appetite, there is a product and production possibilities and diversities of all these. So this has been the case for Turkey. So this infrastructure and these investments are still here, even though we will talk about all the volatility in a little bit. So if we come to the current situation, what has been the case, as if for the last 10 years, if you look at it, Turkey managed to grow like 5.9%. For the last 20, as you remember, it was 5.4. So for the last 10 years, even the growth perspective has been increased. But you see a lot of volatility in the growth, and this has been the case in Turkey. I mean, if we smooth out all this, 6% is a good growth rate in real terms for a such emerging country. And today's problem is the inflation, as you see, and as you live, if you live in Turkey, the main problem. So how this inflation evolved? Okay, there was a problem on the international side. We had discussed a little bit before. So we have been importing all that inflation to Turkey. That's for sure, because Turkey is a commodity importer. Turkey is an energy importer. So we had to get affected from all these price increases all over the world. That's one side of the thing. The other side of the thing is that the policy implementation in Turkey. And since September, Turkey decided to, lower its interest rates, as you see on the right side. So it has come down to 14%. Right now it is kept at 14%. And this is going to go like that. But what we see, the policy rate is 14%, where the market rate goes above 20%. So it doesn't adjust with the policy rates, the current environment as we see. When you look at the loan side or the deposit side, the rates are like about 20%, that's for sure. So when you go to a bank and ask for like a loan, it is highly probable that you will gonna get like prices are over 25 to 30% if you are a retailer, or if you are on the corporate side, probably it's going to be a little lower, but you are not going to get like anything around 14%. That's for sure. So the markets and the policy rate has separated. And the other effect of this is the inflation. So inflation soared. So once you change the policy, you had this outcome, the inflation soared. Once the inflation soared, what people started to do, they had to switch their Turkish lira assets to something to cover them from inflation. So they bought FX, they bought houses, they bought cars, or they put additional stocks, whatever they do, but they try to stay away from Turkish lira. And this had created a little more burden, as you remember, throughout December. We had seen dollar goes up to 18 and came down to 14 levels right now, and the government had to do something. And the policymakers, what we were expecting is a rate hike, of course, but instead of rate hike, they followed different measures. So what they did is they put that measure related with the FX, and it is what we say the covered Turkish lira deposits. Right now, that as a new scheme has been introduced, and what basically that scheme does is, okay, you get the market rate for your deposit. If the Turkish lira depreciation is more, the government will cover the rest of the amount for you. So it is an FX fixed Turkish lira deposit instrument, and this has been introduced for the households as well as the corporates. And it is, up to now, what we have been seeing, that the conversion from Turkish lira to FX, deposits has stopped because now people has a coverage on that, and they receive some little bit of an interest on the Turkish lira side. And for the depositors, the composition, it hold the current composition of the FX to TL side on the banks. So within that scheme, we see that the dollarization has stopped for now. So we can say that for now, the goal has been achieved in terms of dollarization side. But what is going to happen on the inflation side? The news is not good on that side, because 36% inflation for now, it is going to go up higher, because we all know that the PPI side, it is like above 80%, and there is going to be a pass-through from the purchasers' inflation to consumer side. Of course, also the wage increases happened in Turkey. That's also going to put some pressure. And as I said earlier, the inflationary environment on the world is also going to affect Turkey, and that is also going to put some pressure on the inflation. So probably the inflation will gonna go up over 40%, and it's gonna stay there for a while. And we will see what other measures the government had to introduce in order to cope with the inflationary environment. So we can say that inflation is going to be staying throughout 2022 within the high levels, around like the 40% or even higher. We should expect that for throughout 2022, and we will see that what kind of measures to cope with it will be introduced on that side. On the growth perspective, Turkey managed to grow like probably 11% for this year, for 2021, but for 2022, the growth will gonna go down probably to around 3%. and due to the base effect, of course, but we expect some kinds of, credit boost to be introduced in order to put this percent even on the higher degrees. And we have heard the signs of it because the government recapitalized the public banks, and throughout public banks we may expect some credit expansion to boost the economy, but we will see when this is going to happen. But this is a most probable thing for 2022 in order to increase the growth rates of Turkey. So this is another thing to expect for 2022. On the other side, the current account side, as you see, for the last 10 years, the current account deficit has been narrowing. Now it has come below 2% for 2021, and this is probably going to stay similar for 2022. What I mean by that, if the same conditions prevail, because how Turkey achieved this 2%, I will discuss a little bit later on that. But on the right side, you will see that Turkey is an energy importing country. Once we exclude energy and gold, when we look at the commodity side and the services side, Turkey has been creating current account surplus, as you see on the right side. Once the energy prices soars, once the energy prices increases, that's hurting our balance on that side. And that is the case currently throughout the world. And right now it is like $90 for petroleum per Brent, and this may have the probability to increase with this Ukraine-Russian crisis currently intact. So this is going to increase our bill, that's for sure, on one side. So what Turkey has been doing, Turkey had good export performance for 2021, $225 billion. You see that this has increased its export performance. Okay, this is due to some FX volatility. I understand that there had been some depreciation, but on the other side, we had seen that the trade all over the world increased like 10%. So also the China couldn't reach in terms of logistics and the increased prices on the logistics side to the main markets, let's say on Europe, and Turkey took advantage of that too. So with all that, 225 billion, it's a good export performance if you compare with the other countries around. So this is gonna, hopefully this is gonna stay the same levels. So for 2021, we had seen that both on the volume and the price, Turkey managed to increase its export side. On the import side, $270 billion of imports. Okay, the import bill has increased, but it is not the volume that Turkey increase, it is the prices of, as you see, the commodity prices has increased a lot, and this is basically related with the commodity prices on the import side. How Turkey recovered the gap? The tourism revenues. For 2021, $24 billion of tourism revenues, but as you see here, 2019, we had managed to receive $35 billion of tourism income, and this is achievable for 2022, what we believe, because the vaccination rates are good in Turkey's side. Also, the per income per tourist has increased. It comes up to like $800 per tourist, and which means that if we cover 80% of the tourist numbers of 2019, we could reach $35 billion for 2022. This is a good thing. This is going to help to, on the current account side. On the other side, where we export, it is, as you see on the right side, 40% of our export is to Europe. So we are expecting Europe to continue its growth, even though there will be, monetary restrictions will be around, but the Europe will continue to grow. So which means that our market is there to grow. And you see Germany is here, United Kingdom is here, Italy is here. So when you said European Union and the Europe, because the United Kingdom separated from the Europe, so in overall Europe it is 55%. So the Europe is the main export partner if you look at their export share. Also United States is there, and it is continuing to grow. So still the similar export performance may prevail for 2022, but we will see how this is going to evolve, as we said, because there's a lot of supply disruptions and a lot of problems is going on. We will want to see what's going to happen, especially on the chip shortages side, because any sector you look at it is related with the chip, the car manufacturers, laptop manufacturers, or the all these chip related sectors, they have been affecting very highly on that side. That's another thing. So the budget balance, this is important for us also. You see that Turkey for 2021, the budget deficit is below 3%, which is a good thing. This is below Maastricht criteria, where it is stated as like 3% for budget balance on that side. On the public debt side, we have the Q3 numbers. It is like 38%, and it is below Maastricht criteria of 60%, which is good. But for the fourth quarter, probably this is going to increase, but it's going to go up to like 42, 43%. It is still below Maastricht criteria, which means that Turkey has some room to spend on the budgetary side. So what Turkey has been doing with the new policies, okay, it is keeping its policy rate down, but it's not, that much, put effect on the market rates. On the other side, Turkey is using its budget room to support the economy, and this is probably the policy what we expect for the 2022. So there will be more budget spending, more budget coverage, and our budget deficit probably going to increase from 3% to up to some other levels. We will see how this is going to evolve throughout 2022. But looks like the policy perspective turns this way by using this budget room to supporting all economic activities throughout the country. When you look at the banking side, how things are going, okay, due to FX prices, what Turkey did, what the Turkish people did, they borrowed less on FX terms. So as you see, this line here, the FX borrowing has been decreasing. But when you look at the Turkish lira borrowing, it has been increasing. So people switch to Turkish lira borrowings to hedge themselves up to all this volatility. On the right side, you see that FX deposits also increases along with the Turkish lira deposits. Turkey also to Turkish people, the households has been hedging themselves. Also, the corporates has been hedging themselves in terms of all this inflationary environment and putting more FX denominated deposits in place. So what the corporate does on the other side, the corporate is short on FX in the long term. But what we see here, like they are $60 billion long on FX for the next 12 months period, which means that corporates try to cover their external debt by having more FX deposits in hand in order to cover their payments on FX terms. So they try to hedge themselves too. And what's happening on the bank side, and the deleveraging on the FX terms has been happening on the bank side also. You see $150 external debt on the banking side. They have been deleveraging, and it is not that they cannot roll over their debt. It is because, as I mentioned earlier, not that much of an FX borrowers on the domestic market, and that's why the Turkish banks has been deleveraging their FX terms. So people and the companies and the banks try to adjust themselves and do some adjustments on their balance books due to all this volatility. So what Turkish banks has been doing, there has been real banking going on in Turkey. Still it is the case. As you see that loans has been more than 50% of our portfolio. So Turkish banks has been, distributing a lot of Turkish lira loans. So, and when you look at it, where these loans goes, it goes to consumers, goes to corporates, SMEs, and the consumers borrow less if you compare with the advanced economies, and most of the loans go to the corporate sector and the commercial sector and SMEs due to their investment appetites and to cover their working capital needs. And this has been the Turkish market, banking market, as we see. So when you look at the profit size of the banks has been still strong. They have been creating some profit, and it has increased like 30% if you look at the annual change, if you compare with last year, and it is in Turkish lira denominated, but since if you look at on the FX terms, of course, the bank profits has been, less. But what I want to say is that the system still creates profits. And when you look at the return on equity, it is still around like 12%, about 12%. You may say that this is below inflation, but still there's some, return on equity, even though for the last 3 years, we had been going through a lot of volatility. Banks has been, putting profit and, getting some, additional profit for their equities. When you look at the non-performing loans, it is still around 3%. You may say that, okay, there's a lot of things going on the stage 2 side, but the restructuring and all the efforts has been done on the stage 2 has been keeping this low level of NPLs on the banking side. And when the capital adequacy ratios, it is the official number is 18%. You may say that there are a lot of forbearance measures on that. Yes, that's for sure. But even after the forbearance, we still see like around 14% capital adequacy ratios, which is a lot higher than if we compare with the other emerging markets or most of the world. So banks has been very strong and very liquid up to now, and that has been another support on the economy side. So this is the end of my presentation. Try to cover most of the things. If you have additional questions, if you want to elaborate further, we would be happy to answer from now on.
With this, I would like to thank you very, very much for your insights, for taking time, for also answering the questions. I would like to thank our colleagues and our friends from Denizbank, Mr. Hayri Cansever, who had to leave to a meeting, and of course, Mr. Semih Özcan, very much for partnering with us in this. A special thanks goes to my colleague, Christian Meyer in Ankara, who has merged his 3C business lunch with our ABC in Istanbul. And I hope it was deserving for all of us. I learned a lot. So thank you very much. And let's hope for the best for the economy with this. I wish you all a lovely afternoon and evening. We will send you the link and the presentations in a few days. Thank you very much and goodbye.